South China Morning Post, 13 December 2022. U.S. regulator in final discussions with PwC and KPMG regarding audits of mainland companies facing delisting. The report is expected soon. Sources: China has been abusing the world financial system by borrowing enormous sums without repaying them. The majority of Chinese businesses use fictitious accounting and report false data. According to two sources with knowledge of the matter, a team of U.S. regulators is currently negotiating with two Hong Kong accounting firms over their audits of mainland Chinese companies that may be delisted from U.S. markets. This suggests that the unprecedented study is coming to a close. A report might be issued by the end of this year, potentially determining the future of around 168 mainland U.S. companies listed on the New York Stock Exchange. Between the middle of September and the beginning of November, two inspection teams from the Public Company Accounting Oversight Board, PKOB, visited roughly 7 weeks at the PwC and KPMG offices in Hong Kong. They interrogated the firm's accountants about their audits of the mainland companies after going through hundreds of audit working documents. The China Securities Regulatory Commission (CSRC) has never before permitted auditors to transport audit records outside the Chinese mainland for PKOB scrutiny, but that has changed with this review. The on-site review was completed, and the inspectors left for the U.S. According to two different sources with knowledge of the matter, the team recently addressed inquiries to the two accounting firms to discuss specific audit techniques and data. According to the two sources, who also noted that the entire inspection process went without a hitch, the two firms are currently compiling replies for the U.S. regulator in a manner customary for the PKOB. The PKOB website states that if the inspection team discovers a potential problem, it talks about it with the accounting firm, reviews more audit records, and may even submit a comment form about its concerns. The audit business being audited is given a chance to reply in writing to the remark form. The PKOB stated that it analyzes the subject for inclusion in the inspection report after the firm's response to the comment form, adding that audit firms may use additional audit methods to resolve the issue raised by the inspectors. A review of the effectiveness of a firm's corrective efforts, concerning either previously identified flaws or deficiencies detected during that inspection, may be included in an inspection, on a sample basis. According to the PKOB, this communication marks the conclusion of the review process before a report is published. The PKOB has stated that it hoped to obtain information on whether the study can satisfy the requirements of the U.S. inspectors by the end of this year. KPMG, PwC, and the PKOB made no comments. 15 Hong Kong and mainland accounting firms registered with the PKOB audited 168 Chinese companies that were listed in the U.S. and had a combined market value of $1.5 trillion as of June, according to the audit regulator. If they refuse to allow the PKOB to see their audit reports for 3 consecutive years, these corporations risk being delisted from U.S. exchanges by the U.S. Holding Foreign Companies Accountable Act. As it could not analyze the audit documents of Chinese companies being audited by mainland and Hong Kong-based accounting firms, the PKOB stated in December last year that China and Hong Kong were the two regions that did not meet the requirements. Following the signing of an agreement by the Ministry of Finance, the CSRC, and the PKOB in late August, China released the audit documents for the procedure. According to the Post's sources, mainland authorities are pleased to see that U.S. regulators are concerned with ensuring that the auditors have performed their duties. According to a source acquainted with the mainland regulators, the mainland regulators had concerns that the overseas regulators would want to see sensitive information during the inspection, but the review process has demonstrated the U.S. regulator keeps its attention on audit quality only. This would encourage mainland China to think about allowing U.S. inspectors to do the audit inspection the following year.